Hi everyone, I'm Maggie McGrath, editor of ForbesWomen. In the United States, nearly 1 in 6 families experience infertility, and just one cycle of in vitro fertilization can cost $20,000. It often takes more than one cycle to attain a successful pregnancy. This means that IVF is ultimately creating an asset class in the U.S. that one founder would argue is untapped. That founder is Claire Tomkins. She is the founder of Future Family, and she joins us now with an exciting announcement. Claire, thank you so much for being here.
Maggie, thanks for having me. It's great to be here.
So we're going to break some news a little deeper in the conversation, but you are really innovating the IVF and fertility space by looking at it as an asset class instead of approaching it from yet another fertility solution. Can you tell us what Future Family is?
Absolutely. So Future Family is the largest financing platform today in the U.S. for American families for in vitro. We also cover things like egg freezing, which can be a step along the pathway to building your family and using fertility treatment. You're exactly right about this being an asset class in the U.S. now. It is the 4th largest expense. Mortgage, auto, education, and now family building. And so the biggest really barrier to being able to start your family, especially with fertility treatment, really has become the cost of treatment. And that's the solution that we're obviously working on at Future Family.
So often we talk about fertility coverage as a workplace benefit, but for folks who don't have access to a workplace plan, they're kind of out of luck. So is that the type of customer that you're pursuing?
Absolutely, and that is still the vast majority of Americans. This is a very personal mission for me. I have 3 children, a 10-year-old and twins who are now 7, all born via IVF. So I had spent my career in the asset space and consumer finance, but only through going through IVF personally did I really come face to face with the costs and the financial aspects. In every other dimension of our lives, 87% of Americans finance their home, 85% of Americans finance their auto. Almost all of us have taken out education loans. This has been something that very naturally speaks to the need for a product that instead of paying, as you said, $20,000, you pay $400 a month for IVF with Future Family.
$400 a month, and what are the interest rates on these loans?
Yeah, the interest rates vary. They look like a typical personal loan. One of the things we've been able to innovate, though, is to show that this is a high-performing asset class, which allows us to offer lower interest rates to American families than would be true for just taking out a standard personal loan for another use.
That's interesting, because I imagine...
Because you want to invest in American families. I mean, that's what building an asset class is about. It's allowing the capital markets to invest where they want to, in this case, in building American families.
And of course, we at ForbesWomen talk about highly educated women who've perhaps put off the decision to have kids, or in my case, I was paying down student debt for a very long time, and then you get to your mid-30s and only suddenly are you free from that financial burden before you can consider buying a house, building a family, or making any other large financial decision.
That's right, and you have a lot of financial demands. At the same time, we all know that starting a family is very motivating. It's an inflection point in many ways, and we're all going to continue obviously working and growing our careers. So having that sort of financial freedom where you don't have to use your savings, you have financial products available just like you do when you think about a mortgage or an auto purchase or an education loan, and that's really been our entire focus.
What's been the investor response to your company? Do they see the value proposition?
Yes, although it is interesting and a little mixed when you live in Silicon Valley or in the tech industry. I think there is a little bit, as you said, workplace benefits. There's a little bit of insular thinking where it's like, whoa, wait, but don't you maybe just pay out of pocket for this? And it's like, actually, no, for such an important financial decision and such a large investment, typically you would have, financing freely available. And I think that message is getting out even more so now. There's much more focus on high-cost elective care in this country, where the idea for all of women's health is we have a lot of innovation in America, but sometimes we have issues getting broad access to health care.
That is definitely an issue, and you talk about the maternal care deserts. It's a whole separate conversation that we could have.
Yeah, but it's an issue for sure that reverberates across the healthcare system.
Now, you have had a pretty busy year at Future Family. Earlier this year, you announced a $400 million fund specifically for this financing. Can you talk about that?
That's right, and that really, I think, was a landmark deal for us with our partners at Clear Haven Capital Management. really signifying how this asset class is starting to grow, is the ability to, of course, extend financing to more families. So 400 million will represent about 20,000 new families on the platform. And obviously we continue to seek, and grow the commitments to financing activity. So that was a big announcement for us earlier this year, and then we followed it with a product announcement.
We'll get to the product announcement, but you've provided more than $200 million in financing to more than 10,000 families. So the demand is
essentially
there.
Doubling exactly our existing. Exactly, there's been a lot of demand, and I think now you can also see that, from an asset perspective, this is a great place in the market to invest.
How big could it get? What's your TAM in your mind?
Well, I mean, if you think about 400 million is financing about 20,000 families, and there's maybe 1 million families seeking treatment each year, just based on kind of where the population is, you can see that this asset class can grow phenomenally.
Now, the product announcement that you're referring to is Baby or Your Money Back, which almost sounds too good to be true for families that are really yearning for a child. How does that work?
Yeah, well, this is something that was also very near and dear to my heart since founding the company. Is like, it's one thing to obviously be able to offer financing, which is critical in this space. It's also, though, the case that success rates are not perfect, and as one of the doctors we work closely with said to me the other day, unfortunately, no one has a non-zero chance of failing, and I had been through multiple cycles to have my daughter. And so the idea of Baby or Money Back was born with a number of partners around the table, including Munich Re Ventures. Munich Re is the largest global reinsurance firm, our partners at Milliman on the actuarial side, and we looked at it from the perspective of, would we be able to offer a financial guarantee? That if you did not achieve success after 2 cycles, you'd at least have financial security. Doesn't change, of course, like the disappointment with going through 2 cycles of IVF and not achieving success, but it does give you the financial security to potentially pursue more treatment or take another path. And so that product, which is only possible because the success rates are now high enough to offer a guarantee, can now be purchased when you buy your first IVF treatment cycle.
2 follow-up questions there.
Yeah.
Only high enough or only possible because the success rates are high enough. So what's the success rate among future family customers?
Yeah, so the success rate varies widely based on age. It's one of the biggest factors that determines it, but there's other, as you would imagine, biological or physiological factors that could impact IVF success. But the idea was that in the early days of IVF, it was not very successful even for a single cycle. And now, if you were to have 3 or more cycles, on average, not for every couple, but on average, you can get to a success rate even above 90%. So, but you can see it may take a number of cycles.
And
so
we're specifically talking embryos.
Right, we think of a cycle as you go through a stimulation protocol and then hopefully create eggs and then embryos. So now we're talking about if you are not successful after 2 cycles, you can get your money back. So that gives you, of course, some financial protection that would then allow you to pursue additional treatment if you needed a 3rd or 4th cycle. And that's been the idea behind that guarantee.
So if a family is paying $400 a month for 2 years, they get that money back and they can either do another cycle or put that money towards an adoption?
Yeah, they have coverage on whatever they paid out of pocket or through financing, but whatever they paid for their IVF cycles. So let's say that they decided to take coverage of $40,000 because they anticipated 2 cycles. They could insure the $40,000. If it doesn't succeed, they'll get the full $40,000 back. And they may have paid some interest or other fees along the way, but that investment, that principal is now protected.
You announced that in roughly February, was that?
That's right. We announced the product was coming in February, then launched it in May. And we're very excited to be able to now say that, again, for couples who are starting IVF in this country, they can purchase this guarantee alongside their treatment plan. So
recognizing that it's still new, have you had anyone get the money back, pursue another avenue?
Really great question. It's typically, this policy or this insurance, Baby Your Money Back, will last for about 30 months of coverage. So it's actually we haven't had any claims yet. It's too soon.
Because it's too soon in the
That's
cycle.
right, because you typically would go through 2 cycles, and each cycle can take anywhere from 12 to 14 weeks, depending on that cycle.
And then the recovery time in between.
Exactly. So we will obviously, issue refunds to those who don't succeed, and I imagine those will start next year in 2026.
So speaking of 2026, we are in the final part of 2025, and as we head into the new year, you have an announcement that I teased at the beginning of this segment. Can you share what that announcement is?
Yeah, Maggie, I'm delighted to get to share the news with you. So Future Family is welcoming a new CEO in Alden Romney, who is an incredible healthcare executive and leader. He's helped build brands like One Medical. He's helped exit companies like Pacific Fertility Center. He brings a depth of healthcare experience, and I think can say that he is as passionate about this particular mission as I am.
How did you make the decision to hand over the CEO reins? Because it can be hard for a founder to identify the opportunity to make a transition like this.
Yeah, I feel incredibly lucky that Alden and I got put together, and that in itself felt a little serendipitous. We were introduced through a great mutual friend in the healthcare space. I think it was really this incredible alignment around what Future Family has built so far, but also what the remaining potential is in the business. And in particular, very drawn to Alden's experience in healthcare. It's a very specific, we talked about an asset class. This sort of financial and fintech innovation within healthcare is still very new. And so really now, with Alden joining the company, you have this ability for someone who's got a deep, deep healthcare background across, as you mentioned, employer, payer, a lot of different areas of healthcare, who's coming in to really help us continue scaling the financial offering.
I was going to ask, because you have an asset background, he sounds like he has a healthcare building background, so I was going to ask if that meant like a pivot for your business, but instead it sounds like bringing all the various component parts together.
I think that's right. I think a lot of, when you think about just broadly, like the space we're in, innovation, tech, women's health, we are seeing a lot of incredible innovation in this category. And now the question really becomes, how do we scale distribution? All these great solutions that are coming out of the tech and innovation ecosystem, they need to be pushed across, broadly adopted by payers. They need to be, obviously increasingly adopted by employers into their benefit packages, more broadly available across the provider landscape. And I think Alden's unique background, like so deep, a lived experience in healthcare, is going to be really instrumental to that.
And as he takes over as CEO, you will move to executive chair. So what will that mean for your day-to-day work?
I'm excited to have even more time to focus on both the asset and capital market side of the business, but also just the mission and the strategy, and being able to really spend more time with some of our partners in this space, but to continue working very closely with Alden as he sets the strategy for growth across the healthcare landscape.
So obviously there are developments that you can't share with us now, but if we were to speak 1 year from now in September 2026, what would you hope to report to me then?
Well, I certainly hope that we can come back and continue saying that we're bringing in more commitments to this space on the financing side, right? The ability to help more and more American families. I think 20,000 is an ambitious goal, and yet there's so many more that need care and support. So I hope that when we come back together, perhaps we will in a year, that we're able to share the fact that we're just continuing to expand the business in a way that actually gets healthcare in the hands of more American families.
What's the number one question you get from consumers?
Gosh, it's fertility and it's finances, so I feel like it's sometimes the intersection of the two most complicated and often emotional issues that we talk about at the dinner table. So we get so many questions. I think really, a lot of them are on the fertility side specifically. And we do have on our platform, in addition to financing, registered nurses who are coaches. So we offer our financial clients some support on their fertility journey, because exactly that reason, as a financial institution, we still get inundated by fertility questions. I think on the financing side, it really is just trying to wrap your, arms around the idea of like this being a big investment and that pathway of like what if it doesn't work. And I think that us being able to offer a financial guarantee has gone a long way to being able to create that peace of mind as people start this journey.
Well, I normally end interviews with the 1 year from now question, but I ask the most commonly asked question because I actually want to end on your advice for the Forbes audience watching. Because of how many Americans experience infertility, I'm curious to hear what your message is to anyone who's watching who is either assessing financing, thinking through their options, or just generally befuddled at this point in time.
Yeah, I mean, I generally like to end things on a really hopeful note because I went through a quite complicated journey to build my own family. So I think my optimistic note would be, look, there's now been a lot of innovation and it continues in this space. There are a lot of great solutions. Your most important two things if you're thinking about fertility or starting your family or somewhere on this journey are to make sure that you are able to find and visit a good doctor. A lot of people delay seeing a fertility doctor, also known as a reproductive endocrinologist. A lot of people delay that thinking like, oh, well, it'll work next month or I'll figure out something. I always encourage every woman, every couple to be really informed about your health. So that's really step one, is seeing a fertility doctor, getting a baseline, even if you're not sure what's going on. And then the second is it's really certainly my personal mission to make sure that everybody also feels like they have financial options, and which we are proud to offer through Future Family.
Claire Tomkins, thank you so much for sitting down with us at NASDAQ MarketSite. We are so happy to have you, and you will have to come back to report on that claims data.
I look forward to it. Thanks so much, Maggie. It's a pleasure to be here.